Hello, Andrew Momes, owner of Intuitive Finance and recognised as one of Australia's best mortgage brokers. I thought I would take you through, for those of you out there looking to do renovations, whether it's structural or non-structural, the key differences between the two and how financing can have an impact on that. So I guess the first thing I'd like to talk about is what's the difference between structural and non-structural renovations or improvements. So non-structural improvements are generally your painting, carpets, pulling out a kitchen and a bathroom and things like that. Obviously all cosmetic, what we would say, and value adding in terms of just working within the property that you've already got, whether it be a house, a unit, a townhouse, whatever it is, and actually value adding and improving just the inside look and feel, sometimes the outside as well. Then you've got your structural improvements. So this is where you start taking beams out, potentially taking the roof off and putting a second story on, adding extra rooms at the back, and anything that really affects the current bones, I guess, of the property that stands there at the moment. So if we talk about a structural improvement or renovation, because you are addressing and amending the actual subject property, generally to finance that you'll get a full contract, and it's obviously normally substantial works, you know, circa 100,000 and above, you know, if 100 to might be 400,000, you're doing a major renovation and improvement and a value add too. So with that, generally not that dissimilar to actually getting a new home build. You'll get a contract, there'll be stages that the builder will want to be paid at as they complete the work, so it'll go through that process. Quite simple. We get the banks involved, we do progress drawdowns that are detailed in the contract. They often will want to go out and just inspect the property and make sure that the work has been done to a standard that they're happy with, and then they make the payment. The difference with then non-structural is generally you're looking at a far smaller investment. You're generally looking somewhere maybe between $20,000 and $75,000, let's say. And at the upper end, we're obviously doing some significant bathroom, kitchen, really probably gutting the whole property and starting again. An average renovation, I would say, costs around about $50,000 in a unit to do a kitchen, bathroom, redo the floorings, redo your air conditioning and heating, and things like that, a good splash of paint, and modernise the place. So how do you do that? I think there's a couple of different ways. For clients that have access to the funds, either with other borrowings or cash, I think the easiest way is for you to self-fund that. Now, what I mean by self-fund, it means that you do the works and don't have a bank involved in actually progress draws and things like that. Now, by doing that, we can often get in somewhere between 6 and 12 months a better uplift in value if you've got the right property, if you've done the right renovation work, and of course the market has a key factor on that. So if the market's risen and we've got some comparable sales of really renovated units, there might be times when we can't get those comparables. It might affect your end value, but by doing that, often we see, let's say for an example, you take a $500,000 property and we do a $50,000 renovation. Logic suggests that it's now worth $550,000. We've got examples of really good property in the right place, actually getting them revalued at around the 9 to 12 months later down the track at $600,000. Of course, factors need to go our way. You know, we've been enjoying our rising property market, so whilst that's going ahead, that's obviously a benefit. If we can get comparable sales, you've obviously, by having a better property, you can get comparable sales. Now, not all units in that local area might have been renovated. And the other thing that we've got is obviously normally a higher yield off your cost base, because by doing the renovation, you're going to attract a higher value of tenant who's willing to pay you a little bit more for basically a brand new apartment on the inside. So they're the factors that really take into account. Now, if you need to finance that, we can generally finance that that renovation of around the 50,000 at 80%. So we can borrow 40,000 of that, and you only need to put in 10,000. A really sound investment if you're putting in 10,000 to valuate your property. If we get that uplift to, like I said in the example before, if you could spend 10,000 and you get uplift your value by 100,000, it's a bit of a no-brainer, isn't it? So again, having the right property is really important, and being in the right area, doing the right amount of works is really important, and then it's the schedule of works you're doing and whether you can fund it or you need bank assistance in terms of the end valuation that we may get. So I hope that helps you. We specialise in this area of helping clients doing renovations to their investment properties and their homes. So if there's anything we can do to help anyone, please contact us here at www.intuitivefinance.com.au, or of course you can call us on 03 9598 8544, and we look forward to helping you.